Hello everyone, welcome back to another episode. I'm joined by two legends of the game as usual, Neja and Josh. Josh, first of all, how are you doing?
I'm doing well, Sam. Doing well. Got up very early to watch a Liverpool side not get a
Course.
win this morning. Straight into football. Really, it's all we talk about on this podcast. Maybe a little bit of finance, but no. Other than that, doing pretty well. How about you, mate?
Yeah, good. On the football front, it's Arsenal versus Tottenham later this evening, so I'll be off to the Emirates, but we're in a bit of a bad patch at the moment. We're like a company that's had two poor earnings reports in a row, and you just think, well, is it ever going to get better? Sometimes it does. So fingers crossed. But
Losing some of your
Neja,
executives at the same time.
yes. Neja, how you doing? You good?
Yeah, I'm good. I don't have any football news, but year has just started and it's already so busy on the market. I mean, earnings season is here, and I think it's getting just busier and busier, doesn't it?
Yeah, it is. It does feel like, last week was the first full week of 2025 from a trading point of view. And that was just like, okay, here we go. We're warming up now. A bit of confusion in the market. It didn't really know necessarily the direction it wanted to go. I think Monday was good. Tuesday was bad. Wednesday was flat. Thursday was closed. Friday was bad. And it's just like, okay, well, what is going on? Now you've got inflation today. You've got earnings that are starting up. Okay, let's really get into it. So it does feel like from today onwards, the market might know a bit more about the direction it really wants to go. I don't know. Do you both feel that as well, Josh? Do you feel like today it's almost the day where we go, okay, fine, new start.
Yeah, it kind of feels like we spoke about inflation for a long time being that most important number in markets and how key it was. And I think this is probably one of the bigger, more important CPI reports than we've had in a long time. For a while there, we kind of switched off really caring. We didn't stop caring about CPI, but we knew it was going down. We knew the Fed was sort of cutting rates. We weren't sort of really worried about inflation sort of rearing its head again, whereas now it's the complete opposite of that. So I think it's sort of come back to, quote unquote, Mr. Famous Ben Laidlaw used to say, the most important number in markets is back.
He did. And Neja, you'll talk about CPI in a bit, so we'll come to you on that. Of course, for those that are listening, it's coming out an hour before the cash open. You can work that out wherever you are in the world. Josh, you're going to talk about Bitcoin, and I'm going to talk about TikTok, which will always be fun, I'm sure. Josh, let's get stuck in and talk about Bitcoin, which, along with the markets, had a bit of a rocky start to the year. I mean, the back end of the year wasn't actually that amazing either. However, last few days, we've had a move higher, which of course will please crypto holders and Bitcoin in specifically holders quite a lot. What are your thoughts and what do you expect from the asset going forward for the remainder of the year?
Yeah, look, it wasn't the start to 2025 that I think investors were sort of hoping for, especially after we finished with such a strong 2024. We've ultimately been pushed back after sort of rate cut expectations have sort of dwindled. And we're also seeing what's, I think, quite important, the correlation between equities rise to their highest level since almost 2020. It's dropped quite significantly throughout last year as well. And that's important because it comes back to the point that we were sort of mentioning there about sort of inflation coming back to be really important to markets. And it's coming back, that correlation's coming back because investors are weighing up macro with Bitcoin, especially because we've got this inauguration just around the corner. There is this sort of toss up between the new president making the US sort of the home of crypto, better regulation, clearer framework versus the risk of inflation rearing its head and sort of other policies that may sort of affect risk assets. So bottom line, crypto, as we know, is clearly a risk asset, probably the top of the list, the risk asset list, to be frank. And if investors are feeling uneasy, crypto and tech is going to usually come under pressure. But as I say, that correlation is sort of really starting to rise, and I think that's picking up because that's the key news right now. Last year, when we had events such as the ETF launch, the halving, the election, we saw the correlation actually drop pretty significantly because, crypto investors had crypto related news to almost focus on. But when there isn't, and the only thing that's really driving markets is macro, then we tend to see that correlation pick up, and then investors really tend to sort of start to treat these assets like traditional risk assets as well. And this is only going to sort of really chop and change and really pick up as we continue to see institutions get more involved with the asset. And I think it does come back to more institutions probably getting involved to start this year as well. For investors, I think what we're seeing at the start of the year is a bit of short-term pain. I do think Bitcoin has got another strong year ahead. I think we're going to see more companies looking at owning the asset this year. We had rumors circulating about Meta yesterday, Mark Zuckerberg talking positively about the asset. We had an Italian bank buying 11 Bitcoin, thanks to our Italian analyst Gabrielle for letting us know about that. They were buying Bitcoin yesterday as well, so huge step forward there. So big progress. And I think it will most likely be easier to own on a balance sheet in 2025 than it ever has been. Accounting rules are going to be easier. As you say, new regulators sort of really coming in at the helm, which is, ultimately going to make this much clearer and much easier for companies to understand. Prior to that, it's been a risk for companies to own it. Now, I think this year in 2025, that's not going to be such a risk, and that's going to be easier for people or for companies and enterprises to own it. So for me, just the tip of the iceberg, but clearly right now, macro is sort of center stage. We've seen that from the price movement over, since we started this year and even towards the back end of last year as well. So CPI is really going to be key for direction over the next couple of days.
Yeah, I mean, macro picture is the most important thing right now. Even though the earnings season is starting, everyone is just focusing on what macro is saying. And CPI obviously will be one of the most important events. But it's interesting to see how many institutional investors are getting involved into cryptocurrencies. I think I saw news yesterday that MicroStrategy is still investing more into Bitcoin. I'm not sure if that's true or not. And even still on these levels, they keep buying more. And yeah, it was interesting to see that Italian bank is getting involved as well. But there is also lots of talk about altcoins. And do you think that this is also picking up? Because for now, we saw that they kind of retreated with Bitcoin in the beginning of the year.
Yeah, I think altcoins are always going to sort of really follow that lead of Bitcoin as sort of the dominant player. If Bitcoin moves, then we're certainly going to see altcoins follow suit, especially to the downside. What we did start to see towards sort of the back end of last year, when we saw that big movement from Bitcoin, we'd started to see altcoin season, as it's sort of known within the crypto bro space, sort of really come through, and we started to see some outperformance there. I think that will pick up. If we get past that sort of macro view, if we could sort of see the fundamentals of crypto go back to crypto and maybe focus less on macro, then I think altcoins will do particularly well. But again, we've got to remember, if we're talking about altcoins, we're talking about, higher risk assets again, even from sort of Bitcoin. Bitcoin's probably seen more as a safe haven in the crypto world. So really, if we're going to look at altcoins, we've probably got to see rate cuts for that to happen. And as we know, they're sort of dwindling right now.
Yeah, it's going to be a telling time. And listen, one of the main events for the month happens today with inflation, and that's going to influence appetite for risk. I suppose we're not quite at the point yet where we're on the podcast going to start discussing Fartcoin, are we? But that, of course, has been in the news recently. I suppose both of you have seen this, where it's got, I don't know, I might get the number wrong. What is it, like $1 billion market cap or at some point, which is it's just wild, isn't it? I mean, come on now. Incredible scenes. But let's talk about something a little bit more serious and definitely more important. The Arsenal Tottenham, I'm joking, US CPI number, which comes out later today. I mentioned it comes out an hour before the cash open measure. So let's just, hypothetically ask, Josh what he thinks, and then we'll go into your thoughts as well.
Yeah, we'll go back to Fartcoin quickly. I mean, we had Jamie Dimon coming out yesterday, didn't we? And he was basically saying that he thinks it's a Ponzi scheme,
Yes.
or crypto as a Ponzi scheme. So I think, but then he also has the bank as well that's ultimately trying to sort of talk to his investors about bringing through, or talking to his bank about sort of allowing the asset to be traded upon. So he's right in both senses, because when you look at an asset called Fartcoin, it's probably hard to sort of take it seriously when you're the CEO of one of the biggest investment banks in the world. But yes, back to more important topics. We do have CPI tomorrow. Again, we spoke about it a little bit there with Bitcoin, but if it does come in higher than expected, Neza, how do you think markets will react, given that we had the solid jobs data last week as well?
Yeah, I mean, last week, this job data really surprised the market. We saw how it dropped right after the report. And I think that if CPI comes higher than expected, I think that we are in for some market turbulence, because higher inflation paired with strong job market gives Fed every reason to keep rates higher for longer. And this is something that market just doesn't want to hear right now, especially growth stock, tech stocks, and they are more sensitive to those higher rates. And it is not just about the headline number. I think this is really important fact, because investors will be really focused on what the core inflation will come in, and given prices like more volatile items like gas and food, this is going to be important. But if stickier elements keep higher, I think that treasury yields might climb even higher, and we could see more pressure on equities, particularly on rate sensitive sectors. We got some comfort yesterday when PPI came in, and it was lower than expected, but that doesn't necessarily mean that we will get lower than expected number with CPI. So this is something to think about before the report comes in today. And there is another factor to consider, and that is strong labor market. Because on one hand, strong labor market, it is keeping consumer spending more, and this is supporting some sectors like retail and leisure. But on the other hand, we could see fuel more of wage inflation, which makes harder for Fed to relax their policies. But I saw one interesting comment from our US analyst, Brett, yesterday, because he said that investors are forgetting that stocks actually do well in mid-inflation environments. When inflation was between 2 and 4% for the year, S&P 500 was up about 10 or 11. So it's gonna be interesting to see what happens today. That will definitely have a big influence on Bitcoin, on altcoins, on equities, on all together. And I remember that we had some bold predictions few episodes back. And I think that you, Sam, mentioned that one of your bold prediction is that we won't see any rate cuts this year. Do you think that that could still happen, given that market is expecting like 50% chance that we see the first rate cut in June?
Yeah, I'll give Josh his credit. I mean, if it happens, obviously the credit. If not, I'm going to blame him. But he was the first one that sort of put that out there when we went for the bold predictions. But
Sorry,
as
Josh.
he has said, it is one of those bold predictions. It's not necessarily something that we're saying is definitely going to happen. But I think it's worth the conversation. It was worth it back when we discussed it, or the sort of middle of December. So do I think that? Do you know what? My answer would change after the inflation report today. To be honest, I think it is actually that important. I mean, what would be boring, by the way, is if it comes in completely in line. Although I would see that probably as a little bit of a positive for markets. Do you know what? Just having looked at a few bits and pieces this to start the year, I do think we get a cut this year. I have to say, that's the way I feel about it. I do think there's going to be twists and turns. That said, if you get a really strong, hot CPI number today, then that has to be pushed back even further. You mentioned no cut fully priced in for the best part of over half a year. So, yeah, I'm unsure. Josh, what do you think? Are you, if you had to put an answer on it, do you feel comfortable enough right now, or do you think that's a bit stupid to do just before we find out this inflation number?
Yeah, it probably would be a little bit stupid, I think, to be fair, to try and make that assumption before today's CPI reading. But look, I think there's twofold. I think you make a good point, Sam, in saying that, I think we'll get a cut this year. And I think where we are right now, I think that's where I would sit. I think I would say that too. But I think so much can change in a year. We've got, a new presidency coming through. We just don't know. Again, it's really difficult to try and look ahead and ultimately front run policies and front run that. And I think when we look at stocks, we try to look at the fundamentals rather than politics and things like that. But I think so much comes from the impact that it can have on the macro environment. Does the changes that he brings into place, tariffs, etc. Do we sort of see do we see inflation sort of pick up again, and will that hold the Fed back? I think what the Fed won't want to do, and I think this is probably one of the reasons I would stay with the prediction that we don't get any cuts, is will they be worried about the new presidency themselves, right? And it's maybe not what happens this year, it's about maybe what we see at the start of next year or going into sort of early next year. Do they cut and then have to raise rates again shortly after that, right? So we had something very similar here in Australia, where we were sort of back in 2021, and the current RBA governor at the time basically said rates won't have to go up for 2 years. He came out and said that in a meeting. We won't raise rates for 2 years, and I think under 9 months later they had to raise interest rates. So I don't think ultimately, again, I'm not saying the Fed are going to do that, but again, they probably don't want to have to put themselves in a position where if the market is looking a bit hot and they are sort of worried about policies that might come in, are they going to sort of risk a cut just to only sort of have to hike or quite significantly again down the line? Maybe where we are is the new normal for rates.
Yeah, I mean that could be true, and I'm sure that the last thing that they want to do is to start rising rates again after just cutting them. But I also saw some rumors about getting tariffs placed in gradually just because of fears of inflation. So I think that all of those things will have a huge impact on further Fed decisions. But now, if we move on to more, I would say less serious topics, but it influenced so many people around the world, and I think that they're all focused on that right now. Is TikTok coming to be banned at the end of this week or not? And there's been some rumors flying around recently about Elon Musk potentially buying TikTok. I mean, he already has one social media. What do you, Sam, think about this? Is this something that is worth discussing? And why is this news everywhere?
It's interesting about Elon Musk, and Josh might have seen the news that supposedly he wants to buy Liverpool. I think his mum did an interview and was like, of course my son would want to buy it. Why wouldn't he? And it does kind of seem, if there's a company that's up for sale, or a club in this case, as Liverpool, people think, well, who's the richest man in the world? Let's get him involved. I mean, obviously there's rumours about it, isn't there? But let's discuss the current situation, and it's centered around some security concerns and a potential ban from the US. I mean, to be honest, this has been going on for a long time. And I remember back in COVID, so 2020, there was talk about the US wanting to ban TikTok, and it keeps dragging and dragging. I mean, just on TikTok, I don't know what both you two are like, but I mean, I don't use it really anymore now, but I've had periods where I open my phone, sitting there, I'm on TikTok, and 2 hours have gone by, and I couldn't tell you one video I've watched, and you're just there swiping away. But I mean, that's not the reason why it's going to get banned, because people can do what they want with their time. But I think there's a bit of concern around the security, and Biden in April last year signed a bit of legislation around that ban as well. And obviously the parent company ByteDance, which some people may or may not have heard of, obviously owned TikTok, and they were told by the US that they must sell their operations by January the 19th, 4 days from now, or face a ban. That primary issue revolves around fears that ByteDance could share sensitive user data with the Chinese government, which all sounds very suspicious and scary. And I'm not saying it's like this, but I remember, again, during the pandemic, and I don't know whether both of you had this app, and I think it was one where, do you know what? I can't even remember the name. It might have been called Clubhouse or something, where it was basically where you could, and I think you can actually do this on FaceTime anyway, but obviously not everyone has an iPhone. You basically would join a video call and you'd all be able to chat away, similar to Zoom, but I guess it was just what was big at the time. And then there was rumors that actually it was sort of controlled by Russian spies and bots, and they were hacking your phone. And I think people slowly started to not use it again. And when there's concerns around security and different governments involved, you can see why the US have got their backs up against the wall there. And obviously you've got then content manipulation as well. We've seen over the last few elections just how much social media can influence elections. So the US want to take control of that. And obviously, I think it's also worth mentioning, if we were to get a significant ban, and whenever we've had comments recently about a ban, there's a couple of companies in particular that do relatively well, Meta and Snap, which of course, have this content. I mean, Instagram Reels, obviously owned by Meta, are very popular. Snapchat, I don't have an account, but I imagine that's not too dissimilar. And the fact that both those, companies do good or bad based on the news around TikTok makes sense. TikTok are arguing that a ban would infringe on First Amendment rights. I'm not going to get into all of that because I'm definitely not clued up enough about it. But the Supreme Court headed for arguments on January the 10th. And it still seems a bit unclear, to be honest. Obviously, you've got Trump coming in, and then you've got the rumor that Elon Musk is going to buy it. He wants this, or has made comments previously about X being an everything app. It's got I don't know what they call them. Let's just call them short videos on X already at the moment, which it's the same as what they are on Instagram. It's the same that it is on Facebook and TikTok. But maybe they can integrate all of that. Maybe it does become this everything app, and this plan to have bought Twitter a couple of years ago is going to be very fruitful for him. I have to say, I don't think it's going to happen. Josh, what do you reckon?
Well, there's a couple of things I'd add. Firstly, it does make me laugh where they're like, okay, you need to sell your operations, but then also at the same time, you've got the Supreme Court in the US who are trying to sort of stop this monopolization of big tech. But it's like, okay, Meta, go and buy another app to sort of dominate. So it's like, okay, brilliant. Yeah. Second, I'd love to know the valuation. I think ByteDance were looking to go public or have had conversations at some point. And I think, again, this is throwing a number out the top of my head. I think their valuation at one point towards the back end of last year was in the range of like 250, 300 billion. So the US operation of TikTok, there's got to be a big percentage of that. I'd say at least 10, 20%, right? So is Elon Musk really going to sort of shill out anywhere between 30, 50 billion dollars after he already paid 40 billion for X, and the valuation's probably come down quite significantly? Again, unlikely. And is someone else, like you say, Sam, really going to maybe pay for it? Do they just, ultimately, for example, Meta, if someone like that, who probably is one of the only names really that could probably afford it, Snap definitely couldn't. But if Meta can, well, do they just let the operations die in the US and then they can just basically dominate with Instagram Reels? It's probably maybe a slightly better option. On the other hand, will it really come through? I think when we get to these,
I don't think so,
sort of situations, it's usually overturned. And I think I've read things that they'll sort of make it work. I think it has a big influence, doesn't it? I think when you have an app like this that has such a big influence already, and so many companies use it and these types of things, and it's really important. It was very important in the recent election campaign as well, and I think that's maybe one of the reasons that we probably won't see it banned, and if it is banned, maybe for not very long either.
Yeah, I also think that it's not gonna get banned, that it's gonna be lots of arguments around it, but at the end TikTok will stay, but I don't think that he will buy it. But I'm still on TikTok, and I saw a few videos yesterday of people telling that they rather give China their personal information rather than to Elon Musk. And now they call themselves TikTok refugees, and they're transferring to Red Note, something like that. It is one of the most downloaded apps on App Store right now. It is also a Chinese company, and it's like I didn't download it. It is all in Chinese, and it's supposed to be like a blend of YouTube and Instagram. So maybe there's going to be more apps coming up. I don't know.
Oh my God. People, honestly, are just, such idiots sometimes. But look, what will be, will be. I'm with you both. I think it all gets sorted out. I do. I mean, it's literally like Trump and the tariff situation, by the way. Go hard, keep going at it, and then ease it off a little bit. I think that's the way it's going to be. Look, that brings us to the back end of the podcast. For those that are listening before inflation comes out, the truth is, if that comes in really hot or really cold, the markets are going to start pricing in different things to what they're currently priced in right now. So do keep an eye on that across eToro, across all your socials and all of that kind of jazz. But Josh and Neja, as always, thank you very much.
Thanks, everyone.
Thank you. See ya.
Take care, everyone.